20 years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in Alberta joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as Chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years, we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and management, we are united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP fund. We invest the CPP fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. we have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation. And as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long-term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
I want all young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it'll be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they're offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in Alberta. We're now moving, as Heather said, to the final segment of this public meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of Alberta and would therefore like to acknowledge the lands and traditional territories of the Indigenous people of Alberta. My name is Tara Perkins, and I'm the Managing Director of External Affairs at CPPIB. We're happy to host these meetings to provide you, the CPP contributors and beneficiaries, the opportunity to ask questions about our organization and the role that it plays in helping ensure the fund's sustainability. I'll be moderating this session, and I'm here today with Michelle Leduc, our Senior Managing Director and Global Head of Public Affairs and Communications, who will answer your questions.
Thank you very much, Tara. And before we begin, on behalf of the entire organization, let me extend our appreciation to everyone for joining us today. As Tara mentioned, my name is Michel Leduc, and I'm Head of Public Affairs and Communications. However, I'm also part of the senior management team that's responsible for the overall strategy of the organization and the operations of CPP Investments. I'm here for you today in that specific capacity and looking forward to take on your questions while sharing insights into the activities of the organization. We're a purpose-driven organization, and I can't think of any other ways to make this more real than the opportunity to engage with the public we serve. While this is my 5th set of public meetings, it is the first one for me in a studio rather than meeting you in person. Another reason that I look forward to the end of the pandemic. Back to you, Tara.
Thank you. And we do encourage your questions today. If you have one, you'll see a little icon that says Ask at the bottom left-hand side of your screen. You can just click there. I know a number of you submitted questions in advance, which we're very appreciative of. We received a fair number, so if we don't have time for all of the questions, both advanced and live, that we get today, we will keep track of all the questions that we've received, and we'll endeavor, in line with our protocols, to reply to you by email afterwards in a timely manner. So Michelle, let's kick it off with a question. Start with one that we've received in advance. The Alberta government is developing a plan to create an Alberta pension plan and opt out of CPP, as noted in Recommendation 13 of the province's Fair Deal report. Please address the impact this would have on the CPP fund in general, as well as how this would affect individuals in Alberta. They're asking for you to touch on aspects like, would individuals be forced to accept this plan? If an individual has accumulated CPP benefits, would those be transferred? Would other funds consider doing this? Can you comment on this scenario?
Great. Thank you, Tara, and thank you for the question. I know we've been receiving a number of these questions related to this proposal of establishing an Alberta pension plan. There is considerable amount of uncertainty. A number of those questions that were asked are very fair, very reasonable questions. Unfortunately, we don't have a lot of the answers. A lot of these depend on a lot of ongoing assessment and consideration if the province were to choose to proceed in that manner. There are a few things that we do know. One of the first things that we do know that as a matter of constitutional jurisdiction, the provinces have the right to make decisions on pension matters. So that's important. However, the Canada Pension Plan is arguably one of the best examples our country has on cooperative federalism. And the CPP's portability is one of the things that has really brought the country together since 1966. But again, let me emphasize that Alberta is in its right to consider this question and to consult with Albertans. If they do choose to go down this path, it is a very rigorous process, one where I believe there will be a lot of opportunity to really, truly understand what are the implications for the Canada Pension Plan, and of course, what are the implications for Albertans. What I can do is certainly speak on behalf of the organization. And that's one where we are truly dedicated to Alberta. We consider ourselves an Alberta organization. We've been serving the organization since the very beginning. And our performance, our operational performance, our financial performance really speaks for itself. So I really encourage all of you to take time, look at our annual reports, look at our performance record, look at the types of investments that we make. And then this is something that we are really dedicated is to continuing to focus on our job, and that is serving all Albertans, all 2.8 million contributors and beneficiaries. Thank you for the question.
It looks like we're receiving a few on that topic, so maybe we'll come back to it again later. Okay. But for now, turn to another one. The questioner is asking, I understand that CPP Investments has a target to invest 33% of its portfolio in emerging markets, and plans are in the works to establish an office in Beijing. Is it acceptable in your view that we continue to double down on China given the strained relationship between our countries? Very good question. And again, similar to the Alberta pension plan question, is one that we are increasingly being asked to discuss. Why we invest in China. And so we definitely receive many of those questions. We invest in China for a number of reasons. It is, first of all, it is one of the largest economies in the world.
it is in fact forecasted to become one of the largest economy in the world based on our own investment horizon. To help sustain the Canada Pension Plan, it's insufficient to simply deploy capital and be exposed globally. We also have to look for growth. And China is a source of growth in the coming decades. Also, looking specifically at China's investment outcomes, it tends to move uncorrelated to other markets. And it's important to build that into our portfolio for the sake of resilience. We need to avoid a situation where all parts of the portfolio were to move all at once in the same direction. Where one part zigs, we need to have other parts that will zag. Third, we need optimal diversification, which is similar to this concept of not being correlated, but some aspects are different, which is to address the fund's concentration risk to Canada. This is only prudent. Or specifically, we get diversification from spreading the portfolio across emerging as well as developed markets. China is by far the biggest part of any emerging market exposure that we have. This is all about never putting your eggs all in one basket, but putting them in many different baskets. I would add a fourth one, and this is the risk of missing out. It is human nature for all of us to focus on actions, what we see. Yet there are risks in inaction or the risk of omission. The opportunity costs of avoiding China could have disastrous results for the Canada Pension Plan. Keep in mind that we're not only investing your contributions, but we're also making investments today that takes into account future beneficiaries. In fact, the beneficiaries of your children's children. We can't singularly focus on the China of 2020. We have to look ahead to 2040 even, and look back from there. And if the fund were to completely miss out on 2 decades of growth, it's a price that future generations should not be burdened with.
So our next question comes from a woman asking, how long have you operated at arm's length from the Canadian government? I heard that years ago our CPP contributions were added to the government's general funds.
So a few things on that. First, very clearly, it has always been independent of government. Before we were created, so before we started to operate and invest, which started in 1999, the fund was almost exclusively invested in government bonds, so provincial bonds, for example. So in theory, that was really government debt that sustained the Canada Pension Plan at the time. We were created to achieve growth that would exceed what one would expect from government bonds. From the very get-go, from the beginning, and that is hardwired into the structure of the organization, that is ring-fenced and distinct from government. So for the most part, when governments receive revenues, it goes into this pocket called the the Consolidated Revenue Fund. In our case, the money doesn't really touch government. It is collected off payroll, and then we act as the treasury. We maintain the money. We give the money enough only to pay current benefits, and the rest is entirely invested independently by CPP Investments from the government. So it's a very important distinction than what you would see for almost arguably every other source of government revenues.
Okay. So why don't we go now to a question. We actually received this one by video, and it's addressed to our CEO, Mark Machin. And maybe just before we start playing that, just ask everyone again, if you have a question, the bottom left-hand side of your screen, the ask button there. We're looking forward to getting more of those. We'll look at that question now.
Good afternoon. My name is Murray Sigler, and I'm the interim CEO of the Calgary Chamber of Commerce. Uncertainty and change seem to be the only constants these days for our communities and our businesses. Given this, what are your key recommendations to leadership and management teams to navigate through current market volatility and uncertainty?
Good question. So we'll go to Mark for that answer.
In my conversations with leaders around the world and then in Canada, these types of questions have been raised by organizations. I think this crisis, like many crises, will leave a mark on society and its institutions and our behaviors. And I think it's important for leaders to express confidence and continuity with employees, with stakeholders and really to focus on their well-being. And I also think leaders and management teams need to understand that the old approaches may not be enough. For example, we're starting to see new partnerships and innovative collaborations. And leaders and management teams need to be able to identify those things that really create value and help them stand apart as organizations. The recent volatility reminds us of the importance, in particular, of having a long-term perspective and staying focused on what are the fundamentals of your business.
Okay, so we'll go to another question. What is the approach to implementing ESG within the overall investment strategy up until now and going forward?
Great, thank you. So environmental, social, and governance factors is a fundamental part on how we look at risks and opportunities when we invest the money, whether that's in direct investments and also with our partners and across the portfolio, bottom up and top down. A lot of people, when they think of investments, they think purely in financial, quantitative terms. There are a number of qualitative aspects that really drive risk and returns. Environmental and social governance factors are critical to us understanding the ability of a company to earn steady long-term returns rather than cutting corners and just earning good short-term returns. So from that perspective, it's really important for an institutional investor whose investment horizon is measured in multiple years to truly understand those qualitative factors that will drive the sustainability of the fund. So we think of sustainability of the fund, of course, as a whole, as the most important thing. But if you really break it down, the sustainability of the fund, insofar as we're looking at the investment income, is really the composition of a lot of companies being sustainable and behaving in a sustainable way. And behaving in a sustainable way is not only limited to merely the profits, but what drives those profits, which includes strong, robust environmental practices, how you relate to your communities through social aspects, and of course, very rigorous oversight from the board of directors and other governance aspects.
Great. So we've got a video question. This one is for you, Michelle, that we've received. Maybe we can roll that clip now.
Hi, my name is Kiki, and I'm a resident of Calgary, Alberta. I'm also a community empowerment executive on Future Fund. Future Fund is a student-run national not-for-profit dedicated to empowering young female students by equipping them with the financial tools and knowledge they'll need. My question is, how is CPP Investments managing the contributions of students, and how can the younger generation take advantage of the Canadian pension plan given the recent expansion? Thank you.
Thank you, Kiki, and I'm a big fan of Future Fund. I think it's a terrific organization, and thank you for your question. One of the big features that really gets me excited about additional Canada Pension Plan is how it relates directly to younger generations. So someone today who turns 18 has got a part-time job or is working for a post-secondary education and contributes a certain amount will become a contributor to the Canada Pension Plan. But beyond that, because of the enhancements, it also means that the Canada Pension Plan benefits that they will get, and partly aided by our investment strategy, will be a much bigger part of their retirement. So if they contribute through their entire career, by the time they retire, what is intended is that the retirement benefits will be up to 1/3 of their pre-retirement income, up to a certain amount, which is about the industrial average wage. So by virtue of the enhancement, the CPP Investment Board just became much more relevant to the young people of this country, which for me and for all of us at CPP Investment is a great motivating factor. And thank you for that question.
So another one, will you recognize that fossil fuels cause climate change and stop investing in them?
So thank you for the question. It's really related to the questions, 2 questions ago around how we think about environmental and social and governance factors. And it is a question that we get quite frequently, and it's one that people bring a lot of passion to, and rightfully so. So I think it's important, and because there's multiple sides to this discussion, that We like to start, and we should start, on common ground. Whether you're working in Alberta's oil patch, raising a family, or you're a passionate volunteer in climate risk anywhere else in the country, or you're an employee of CPP Investments, we all want a cleaner, more sustainable planet. That's a shared goal. We agree that climate change impacts are real, serious, and happening right now. And saying in response to that our job is only about making returns does not sit well because it doesn't complete the entire picture. Our contribution to the evolution over time to cleaner forms of energy is perfectly aligned with helping to secure also the lifetime financial security of Canadians. Both of those are perfectly aligned. Sustainability is the common of both of them and is at the heart of the challenges, and it is our expertise. Yet the path along that evolution is not as simple as a simple flick of the switch. Many forces will determine the pace of that energy evolution over time. We've got things like technology and innovation in cleaner, sustainable production and consumption of traditional fuels and energy, the adoption rate by households and corporations and individuals in renewable energy, and global public policy frameworks that will encourage the evolution over time. We witness today many energy operators, whether they're downstream, they're midstream or upstream in terms of the overall life cycle, playing a necessary, very fundamental and important role in this evolution. Companies like Ørsted, for example, which has made that transition virtually completely, benefiting all of its stakeholders, including us as a shareholder. For us to disengage now with fossil fuel companies are starving them of capital, just as they are working hard to be managing through their own evolution, we don't think is optimal. In fact, we believe it's counterproductive. Blanket divestment does not accomplish anything. Engagement on environmental, social, and governance factors and risks is constructive. Engagement on a company's strategy for us to better understand what they're doing to become more sustainable in the face of this shifting demand that I mentioned from customers and households is constructive. And most importantly, investing in the evolution is constructive. Walking away, frankly, is quite easy, yet it is very harmful to the shared goal I started with.
Maybe we'll go back to another one now on the Alberta pension plan concept. I'm a recipient of the CPP. What should I consider if Alberta decides to introduce an Alberta pension plan?
So, as I mentioned on the earlier question, this is something that each provinces can consider because pension matters are a matter of shared constitutional jurisdiction between the central government and all the provinces. And there's a rigorous process that needs to go through if one were to change the current construct of the Canada Pension Plan and its participants. And I believe it's quite complex and complicated. There are many, many more questions than there are answers. Our advice is to be engaged on that, really trying to understand what are the implications. We stand ready to be a contributor to information and to insights and data to the government of Alberta to make sure they're in a really good position to make the right decisions for their province. We consider ourselves an Alberta organization. We've been investing for the 2.8 million Albertans since the very beginning that we started. We spend a lot of time in Alberta. It is a very important market for us. A lot of our employees are from Alberta. My answer to you is be engaged, ask questions, and follow this closely. In the meantime, we're going to be focusing on the most important thing that we can do, and that's to serve you and to continue to earn the best possible returns as we have done for the distant future.
So one of the women watching this meeting is saying, I'm concerned that many people did not know about this meeting. How did you advertise them across Canada, particularly in rural areas and small towns? She received the notification from Zoomer magazine.
Great. We really worked hard to try to reach as many people. So we've used every channel on our disposal, including, of course, beginning with what we own and control, and that's our corporate website. We also are quite active on well-known social media channels. We also publish advertisements in each province in some of the publications that reach a number of Canadians all across the country. On top of that, we also reached groups that have their own constituencies. So, say unions or chambers of commerce that would have hundreds, if not thousands, of members, and so we work with them to say, get the word out. We work for all of you. We work for 20 million contributors and beneficiaries. We have limited resources in how we can get that word out, but it is something that we're very mindful. One of the benefits, and I want to be careful to use that word because the pandemic is not a good thing, but one of the benefits by doing a virtual meeting, people can't, when you're in a particular hall somewhere, it's much more difficult to get to if people are working. So this ability allows more people to participate. So we do see by the numbers already that participation has gone up dramatically. So that's how we try to reach you. And certainly open to your suggestions on better ways that we could reach you going forward.
So there's a question here. I think you've covered a couple of these themes or both of these themes already, Michelle, but I'll just ask it anyway. So they're talking about how a rumor they've heard that the Alberta pension plan would take retirement money and put it into the oil and gas sector, which they consider to be risky. You've touched on our thoughts about oil and gas. How is CPPIB dealing with the unfolding transformation of the oil and gas industry, and how would your approach differ to the Alberta pension plans?
Great. So there are two dimensions here. There's exposure to energy, and there's the potential construction, a potential creation of an Alberta pension plan. As I mentioned on the Alberta pension plan, there are many, many more questions than there are answers. So it would be very difficult for us to be speculating on what the construct would be of an Alberta pension plan. And so, again, I encourage you to stay involved and engaged on that while we focused heavily on earning exceptional returns for you and for future Albertans. Moving in terms of the ability to use pension funds for things that are above and beyond risk-adjusted returns. Those are always options when you develop the public policy framework for a pension plan. We do know that Quebec, for example, has its own pension plan. Its mandate has a duality to it. It has to earn returns for pensioners, but also to support the economy in the province of Quebec. So as you can see, in the design and the creative design of different policy frameworks are different options. In our case, as I mentioned, our focus is very singular. It is to create a fund that will be sustainable through achieving good returns, taking into account also the risks over the long run. So that's our singular focus, making good returns, considering all the factors that might impact the risks and the opportunities.
Great. And just a reminder to everyone, if you do have a question, the bottom left-hand side of your screen, the Ask button there, we welcome your questions. So this woman says, I have put all my investments into ethical funds. My only investment that I cannot trust to be ethical is CPP. What are you doing to move in this direction?
Well, maybe we'll reach out to you and spend a little bit more time on this, because what I will say categorically is your money with the Canada Pension Plan is absolutely ethical. I mean, the business conduct, our code of conduct, our practices, what we think about all of our employees, first and foremost, the integrity is fundamental. If you're going to be a fund that invests for multiple decades through generations, your reputation and the trust, the public trust, is the lifeblood of that system. So it is absolutely an ethical fund. Now, as a purchaser of different funds in the marketplace, with many suppliers, you'll see a lot of marketing around what I'll call capital E ethical funds. And what that definition of capital E ethical funds is a definition that typically is looking at a fund that will screen out, that will exclude entire sectors. So for example, it'll market itself as, if you invest in this fund, there will not be any gambling companies, there will not be any tobacco companies, there will not be a wide range of different types of operations that some people just don't want to invest in, and that's absolutely fair, and then that's within their choice as they're purchasing those products. The fact that our mandate is to focus on risk-adjusted return, we absolutely take into account ethics. We understand that it's very important, and the companies that we invest in speaks loudly about our own fund. So we do spend a lot of time understanding a particular company's environmental, social, and governance risks and factors over the long run. However, in terms of a broad sector, we would not just say we're not going to invest in this entire sector. We'll look at it from a company-by-company basis, consistent with our mandate and our objectives.
Okay. So the next question, this gentleman asks, what measures is CPP taking to become more representative and inclusive in its staff team, leaders, and the types of businesses it invests in?
Great. Excellent question. This is fundamentally important to our strategy to be able to achieve really strong above average returns. So how do you achieve above average returns? You got to be better than everybody else. How are you better than everybody else? You're better because you have a much more inclusive and a diverse set of perspectives on risks, on the ability to make returns, on the ability to how we operate as an organization. And so we've been working exceptionally hard to ensure that we can be as inclusive and as diverse as we can as an organization. It starts right at the top. So for example, as a source of leading by example, our own board of directors is very diverse. The majority of our directors are women, for example, along with other aspects of diversity. And so the ability for the diversity of thought, the diversity of strategy thinking, the diversity of perspectives, the diversity of backgrounds is very important for that oversight over management. And then you look at the senior management team and ensure that we have as much diversity in those perspectives as well. And then it's across the entire organization. And this is what's fabulous about having offices in where we invest from an opportunity perspective as well in terms of risk management. So it's a matter of business sustainability and, most importantly, being the best that we possibly can as an organization.
So we're down to the final few minutes. I'll do two more questions, I think. So the first one, I'm pleased that CPP Investments is publishing its carbon footprint, but the value of this information is reduced without comparative benchmarks and objectives. Will CPP Investments commit to setting objectives to reduce its carbon footprints and transparently disclose how it intends to reach those goals?
Great. Thank you for the question. We just published our most recent sustainable investing report, and I encourage you to have access to it on our website and look at it on the screen and to go through it. It really describes our very serious and very long-term focus approach to the evolution of a lower carbon world over time. And we've published our carbon footprint. We don't think that it's a complete answer. It's one part of the toolkit around disclosure, around understanding the CPP Investments Fund's exposure to carbon. However, we think differently than other investors in the context of some other investors will put a very clear line in the sand and pick a date in the future to say, by, say, 2025, we will have X amount percentage exposed to carbon. That's perfectly reasonable for different plans to take that approach. There are different strategies. Our strategy is to be driven not by an arbitrary date, but be driven by data, insights, and information. As I mentioned earlier, what will drive the evolution to a cleaner, lower carbon world will be a range of very important considerations, from new laws, new regulations, behavior by customers and corporations and households, and technology and innovation. By us being in lockstep with all of those trends, trying to stay ahead of them, then we can better calibrate the fund along those insights and data and information. And who knows, we may actually move at an accelerated pace. That's an unmovable target, can't do that. We can be agile and nimble by being data-driven, insight-driven, and information-driven, and then that's our strategy.
Great. And the sustainable investing report that Michelle referred to should be available if you look at the left-hand side of your screen in the resources tab there. So our final question, what is CPP's current mandate regarding yearly returns, i.e. what % are you striving to generate every year?
No, not to be cavalier, the most we possibly can. We don't have a specific target. There is a number that people see and often believe that that's what we're focused on, and that is what is the rate of return over time that is required to ensure, based on investment income, it will make the fund sustainable over the next 75 years and beyond. And for the base CPP right now, that's around 3.9%. So of course, our goal first and foremost is not to aim for 3.9%. Our goal is to achieve much more than that, what we can do over a period of time. So right now, we're at about 10.7%. over the most recent 10-year period. And we're going to continue to try to achieve above average return to help maintain the fund. So it's not a specific target, but we do have that number to keep us in mind in terms of what is maintaining the sustainability of the fund.
So that's the end of our question and answer session. Michelle, thank you very much for doing that.
Well, thank you very much on behalf of our board, on behalf of all employees for your questions today. Unfortunately, we could not answer all of them because some, I understand, will continue to come in. But our commitment to you is to reach out and get back on all of the questions that we receive. And we really appreciate your participation and your engagement today, and hope that it helped you become more familiar with our organization, our strategy, what we do, and importantly, the fund's sustainability over the long term. We also invite you to complete the short survey that will appear on your screen at the end of the broadcast. And again, thank you very much. Be well and stay safe.